Good morning, everyone. Welcome back to Morning Markets on the 29th of July. A couple of things that the team at True Potential have been discussing this morning to share with you. The first of which I mentioned yesterday, the FOMC meeting started yesterday. We get the conclusion of that this afternoon with the press conference and the Fed statement. One thing that happened yesterday ahead of the meeting was that the Fed announced that they would be extending the nine pandemic sort of response lending programs that they have in place to year end. So effectively taking that point off the table, because there could have been some market participants wondering what are they going to do here. And I think that's important. So to take that off the table, say that the Fed are putting support behind those programs and retaining those programs. The key point of note, however, is that in the main, those programs haven't had to be used to the extent which was initially envisaged. And why is that? Well, it's the important signaling mechanism that the central bank has had into the market, and that has allowed the market to normalize in terms of liquidity. It's also allowed market participants that did step away to step back into the market and provide liquidity. And we've seen that in the corporate bond market, in particular in the US, where issuance has been running at relatively high levels through the course of this year. If we compare that back to last year, indeed the first half of the year has seen a record level of issuance, indeed more than we saw in 2019. So the market structure in and of itself has repaired, but that's a function of the Fed having the backstop, i.e. the market knowing that the Fed is there to step in should there be problems as we navigate our way through the coming months. So that's off the agenda. The other expectations, I suppose, that we can think about is, and it relates to what I discussed yesterday with regard to fiscal support. The Fed are there, they're doing what they can from a monetary perspective, and it'll be interesting to see how they put that back to the US government and to US Congress to think about the fiscal packages that they may need to put in place to support the economy as well. So that will come out later on this afternoon, so we'll see what comes from that, and I'll report back on that tomorrow. The other things that we just touched on this morning, one, we've been looking at the consumer, and we've seen consumer sentiment, retail sales, and other consumer indicators gradually improving. We touched last week on the unemployment number in the US, the weekly number, where that did tick up week on week. If we look at consumer sentiment, we had a July reading for consumer sentiment in the US yesterday, and that fell from its previous level. So previously 98.3 in June to 92.6 for the reading just yesterday. And that just, I suppose, typifies the ongoing and rolling nature of the challenges that COVID-19 presents. We know that there have been spikes in various different states. There's been lockdown measures taken, and that feeds into consumer sentiment. The key thing for us, however, then is to watch how that feeds into economic activity, and that will then become evident in the coming months. So we've seen a strong rebound in activity. Does what's happening at the moment then signify that there will be a plateauing in economic activity over the coming months? That's something that we'll look out for and watch. I think the other thing just to touch on, number of earnings reports from companies across the globe, a couple of interesting snippets in those. Starbucks, clearly global franchise, they talked about their like-for-like sales in the second quarter. That declined some 40%, but also the positive side, that the majority of their stores have now reopened and they're starting to see improvements in those trends. I'll be contrasting that with the likes of an eBay, where they talked about the strength in their business model during the quarter, where they added a number of new users, taking their customer base to over 182 million. And in addition to that, they talked about the revenue growth that they were seeing in terms of the transactions on the platform, and that grew some 26% in the quarter. So just giving you a little flavour of those dynamics that are changing and how some of these business models are capturing the opportunity that's been created in the current environment. Also, if we just then look at equity markets in general, what happened yesterday, we saw the S&P fall about 0.6%, the Nasdaq was down about 1.3% over the course of the day. In the Europe, we had the FTSE 100 up about 40 basis points. Euro Stoxx 50 was flat on the day. We'll see what today brings in terms of those earnings reports as well that are coming through, and I'll give some flavour of those again tomorrow. Thank you for watching, and if you're finding the morning market section useful, please do let us know your thoughts on that, where you can put comments on YouTube or just hit like on our YouTube channel. Many thanks again.